point is why the results of one company in the United States is on top of our show today. Why is it important for world markets, and why it's important for India is because when you're the path breaker in that sense, you lead the way.
Yeah, and well, the company is virtually the size of a large economy, even like India, right? $4.53 trillion on close yesterday, another 5%. So effectively $4.7 trillion.
Larger than the market cap in India.
Simple, right? So that is one reason. The other thing is, so one is, of course, as Tamanna highlighted, the results and the guidance given. But the statements that came in on the con call. So he said that AI is not a bubble, according to him. Obviously, he has to say that, but he said that AI is not a bubble, and he's given the reasons why. So he's saying there's been a lot of talk about an AI bubble. From our vantage point, we see things completely different. And three main reasons why he says AI will stay strong. AI is changing existing work by making them more efficient, known to us. Generative AI is creating new workloads, again known to us. The third point, to my mind, was very important because he's saying AI is coming to the physical world. And by this, what he means that for now, if we are using AI for computing on your laptops, etc., eventually AI will come to cars, to robots, to humanoids, to robotics, and therefore AI will come for the physical world or to the physical world, and that's the next frontier. And quite stunning, I mean, we were joking about this Anthropic deal yesterday. Jensen Huang has said that all major AI models are now on Nvidia's technology. We run them all. I mean, that is a powerful statement by the world's largest company.
So, you guys have both made very important points, pathbreaker, and you've talked about what Jensen Huang said about the AI bubble. But my only contention, and I'm just arguing the other side of this entire piece, right? And you weigh in very quickly before we go to Geoff Dennis, which is that if you compare it, and you can't necessarily compare it to the banking system in India, but bear with me, the largest banks in the space might be healthy, but the very small banks and the lenders that are lending to maybe the people that don't normally get credit from the large banks may not be healthy. So just because the largest player in the whole AI realm of things is doing incredibly well, it does not mean that there is not overvaluation and a little bit of a problem in some of the smaller pockets.
Yeah.
Thoughts?
Yeah. No, it will definitely bear out. For today, he is the story.
Sure.
But I think this will come back because not everyone is in Nvidia, but also where are the other people doing what he's doing?
Sure.
There are very few. Everyone else is sort of a subsidiary, right? Or just moving forward from what he's doing.
Yeah, but just that's last point there. The others, in their own way, are making their mark because Alphabet's shares soared after Gemini 3.0 was received very well. So in some ways, everybody's trying to do what they're doing.
Yeah, and he's the base where everyone sits on. So what is Nvidia saying in their conference call? Let's play out for you what some of their management is saying.
Let me turn to the outlook for the fourth quarter. Total revenue is expected to be $65 billion, plus or minus 2%. At the midpoint, our outlook implies 14% sequential growth, driven by continued momentum in the Blackwell architecture. Consistent with last quarter, we are not assuming any data center compute revenue from China.
Okay, Geoff Dennis, independent emerging markets commentator, joining us this morning. Geoff, we've been talking Nvidia all of this morning. I'm going to start with a very basic, simple question. Why do you think Nvidia's earnings matter so much to the US markets and to global markets? Why do you think it's such a key point?
Well, I think there's a point that you've not mentioned yet in your intro, and that is that we've had a decent sell-off in the US market, indeed global markets, particularly in technology, which has been focused on the AI stocks, including, of course, Nvidia. And it's led to all this debate about, are we in a bubble or are we not in a bubble? And now suddenly we have another good piece of news, very good piece of news from Nvidia, particularly about the outlook. And suddenly I think everyone's saying, well, you know, maybe there's some justification to some of these high valuations. So I think it's partly a very positive reaction to some significant selling over the last 2 weeks or so, which has put the whole AI story into some doubt. And now maybe, you know, people got too bearish.
Okay. Geoff, weigh in on the idea that, okay, if you're talking about Nvidia being a whale and certain other players being sharks, and there is also phytoplankton, and there are also small fish in that ocean, and they're not necessarily doing particularly well. Or who knows, right? Are they doing as well as Nvidia? So I want you to tell us what you think about valuations as they stand right now, having corrected sharply, as you pointed out. Is it justified as things stand right now?
I think the valuations are justified. Perhaps they're a little on the high side, but what you've got with a lot of these major technology names, and nearly all of which have got some very significant AI contributions to earnings, you've got you've got valuations that do look on the high side, but on the other hand, you've got real businesses here generating real earnings, real business models. Obviously, some very, very powerful business models that are going to change the world over the next several years. This is very, very different from the technology bubble in 2000, when a lot of stocks went to very high valuations with no revenues, no profits, no real business model at all. It's very, very different. Now, could there be some smaller players further down the food chain, so to speak, that are not doing as well? Absolutely. But the dominant theme here in terms of the share of the upside in some of these indices, and of course the weights of these stocks in the indices, whether you're talking about particularly, I guess, the Nasdaq, is dominated by all these big names: Nvidia, Meta, Apple, less so Amazon, I guess, Google, all Microsoft. These are the ones that dominate the market, that dominate the indices. If they're doing well, that's what investors want to see. Could there be some big blow-ups further down the food chain? Possibly, but they just won't shift the market like these huge companies, which are doing so much business here.
Jeff, what does all of this mean for the year end? There's a lot of talk of, at some point of time, emerging markets which have underperformed making a comeback. Do you see that happen, or Nvidia, Alphabet, etc., lead to US exceptionalism lasting?
I think the US exceptionalism story does look a little bit better again today than it did, for example, in April with President Trump's reciprocal tariffs, etc., the big drop in the dollar. We've seen a much flatter dollar recently. In fact, the dollar's rallied about 3% off its 2025 low, and it's up again today. But emerging markets are holding up really, really well. The gap between EM and DM is about 1,200 basis points year to date. That's got a lot to do with China, of course, with their own AI companies and what they're doing over there, although I'm very skeptical still about the Chinese economy. So I think you're seeing this outperformance already. I think what's been impressive about EM is the outperformance has continued to grow, even though the dollar has rebounded somewhat. So in sum, I think the American exceptionalism is trying to make a comeback. But at the end of the day, we've had 10 years basically of a shockingly poor performance for EM. And I think this is a much better environment for emerging markets. I wrote something today on South Africa, which is doing very well. Brazil is doing very well. Mexico is doing very well. Korea, Taiwan, etc. And India, I think, is just going to catch up at some point because it's underperformed and it looks relatively attractive now.
Okay. Jeff, specifically on Indian IT, and if you have a view here, of course, yesterday the index was up 3%. And just last week, you had the entire index rising close to 4%. So there is perhaps some feeling that a bottom might have been found on the earnings cycle and deals might look better heading into the new year. Do you have a view on this one?
Yeah, I mean, I don't look at sectors particularly closely within individual markets, including in India. But I think the general point here, and I'm sure the IT sector is part of that for sure, is that you've got tremendous potential growth in the IT sector overseas from India, the Indian IT sector overseas. You've also got the potential for the domestic economy to continue to grow strongly, much more strongly than China now. You've got very, very low inflation, even though at the moment it's got a lot to do with food, and that will eventually, I'm sure, fall out of the index. Inflation moves up, but I see scope for lower interest rates. Currency's okay, given the rally we've seen recently in the dollar. So I think as long as the earnings numbers continue to hold up, And of course, the global story on the technology side continues to hold up. I think Indian tech will do a lot better, as they did yesterday, do a lot better than they've done recently.
Okay. And specifically on valuations in India relative to the rest of the world, and just to close out, Jeff, we've spoken about how there has been a significant underperformance, and just the fact that Q2 has been incredibly good and much better than expected, double-digit earnings growth for a large number of companies, would you say that now we're poised for more inflows from FIIs, particularly because second half looks better and it's promising in terms of valuations?
Oh, the long wait for FIIs to come back.
Yeah.
It's such a hard, I think the way to look at it is to say that at the beginning of the year, India looked expensive, even though it's a good story. China looked very cheap in particular. You've seen all these other Asian markets go much, much more than India. The basic underlying Indian story is good. And that means with the earnings numbers looking good, as you've said, what's happened is that the valuations have improved significantly. And of course, they've improved relative to some of these other big Asian markets and elsewhere in EM that have done much better this year. So I think it's only a matter of time before the FIIs come back, and they will rotate out of China at some point, out of Korea and out of Taiwan. When that's going to happen, I don't know. Of course, as you all know there, valuations typically don't turn markets around. You need a trigger. It's not clear what the trigger is, but when that trigger happens, whether it's a interest rate cut in India or more good growth stories or a trade deal with the US, you'll find that people will use relative valuations in India as a really good reason for getting back into the market. And I think that's going to be the story over the next 6 to 9 months.
I have a comment.